Hi, everybody. This is Tim from Trading Strategy Guides. Good morning from North Texas in the good old US of A. Yeah, we're starting to get into my least favorite season here, summer, where temperatures here can get up to, say, 110 degrees Fahrenheit. That's like 43 degrees for everyone else in the world. It's not my most favorite time. Today, we're going to look at the 4-candle hammer strategy. It's a really cool looking strategy, and I haven't actually used it yet, but I'm going to try it out and do some back testing on it because it looks really interesting to me. First off, though, I want to make sure everybody can hear me and see the slides. Good morning, Robert. How are you doing today? I haven't seen you in a little while. Akira. Oh, well, welcome. I hope I pronounced your name properly. I hope I don't disappoint you. Oh, thanks. Thanks a lot. I appreciate it. Okay, I've got 5 words for you guys this morning. Hot black coffee with cinnamon. Awesome. I drink coffee year-round. I saw a meme the other day that said, let's see, what did it say? If you can't drink hot coffee in the middle of the summer, then you will never survive the apocalypse, or something like that. Okay, if you're watching the recording of this live webinar, you can speed it up by clicking on the gear icon in the lower right, selecting a faster speed. If you're watching live, well, you get to ask questions, so there you go. And stay around to the end. I'm going to be reaching into the archives to share a trading maxim with you. And don't forget to click the subscribe button and click the bell to get notifications when there's a new video. All right, let's take a look at some ongoing trades here. Okay, entered this one right here on this candle, looking for a bounce off the prior broken bullish wedge. And it gave us a little scare here, but then it pushed on up, hit our target, continued to push up. I took half off at when it hit the target, moved the stop to break even. I have been trailing the stop since. Currently, my stop is at 113.30. This is EURUSD, by the way. And the stop's currently at 113.30. I'm hoping that this is just going to go sideways for a little while and then pop some more. But if it doesn't, 119 pips on the second half, that's not too shabby. I won't be disappointed with that. Moving on to Sam. Okay, if any of you were in the special webinar yesterday, that's where I talked about this particular trade. It's not too late to get into this. We've got a nice break or close above this ascending triangle. This is Boston Beer Company, and the symbol is SAM, because they are the makers of Samuel Adams beer. So buying it right here, the stop loss is at 346.12. The target is at 371.72. As usual, that is a 1.5 ATR stop loss and a 1 ATR target. You know, you might want to catch this right when the market opens. If you hurry, this Bitcoin, what can I say? This is Bitcoin. Look how crazy this has been. We got in it on a break of this continuation triangle right here. I got in it here at 87.32 something. Where did I get in it? I don't have it written down. It was 87 something. Anyway, it was just above the close of this candle because I got I missed this close because it was Friday night, and I, I don't like looking at charts on Friday night. I mean, it's Friday night, right? Isn't that when you're supposed to have your feet up and watch, you know, binge watch Netflix or something? Anyway, I got in it, and it hit first target on Sunday a couple of weeks ago, and I've been trailing stops. And last night I moved my stop up to 10.8, I believe. And then this morning I moved my stop up to 11.5 because of this huge candle right here. So currently have $2,726 locked in on the second half, and it's still pushing up hard here. So we'll keep an eye on that, and we'll keep trailing stops, and we'll make a bunch of money on it. The Ethereum trade I talked about a week or so ago, a couple of weeks ago, I guess. I think it was back in here somewhere where we talked about this setup. Took a little longer to take this. Actually, I think I took it short on this here, and then when it closed back in the range, I took the loss. And then I talked about it some more. I moved this range down, and then price went up, and now it's breaking to the upside. So the original video was about it wasn't the time to buy Ethereum. Anyway, I'll post the link below. But this closed Friday night. I did actually get this. This was more than one ATR above the range. So my rule there is I've got to decide whether I want to take half right then or wait for a pullback to within one ATR. The ATR was 1552 at the time. I think this broke $22 above the range. So I went ahead with half because cryptocurrencies don't seem to retrace after a breakout like regular current fiat currencies and stocks and stuff. So you get a huge candle like this on a stock, you can usually expect it to retrace some, but the cryptos just haven't been doing that. So to make sure I don't miss these, I'm taking half, and I'm putting a limit buy order at the 1 ATR level to take the other half, but obviously that didn't enter. I hit the target on Saturday, moved my stop to break even, took half of the trade off, and now this morning I'm moving my stop up here to 305 to lock in 875. So just above yesterday's bar. But this huge bar, just like on Bitcoin, this gave me encouragement to move my stop up. Just this moving the stop is kind of a seat of your pants kind of thing. I a lot of times objectively think about how I would feel if this retraced and stopped me out at this point after being way up here at 344. And so that's what keeps me moving it up. But then I also think about how would I feel if I had moved my stop way up, it pulled back a little bit, took my stop out, and then went up for another, $100 or something. So keep those two things in mind. Be very objective. Don't be emotional about it. But that's how I do this. And I usually will tweet when I move a stop or something. So I'll put my Twitter below so that you can follow me on those. And the Planet Fitness trade that I've been talking about, I think I did a video last week on this. We got this close yesterday. It also is more than one ATR below the range. So I'm in for half at 71.30. I've got this right here, 71.64-ish is the one ATR below the range. So I've got a limit sell order right there. So we'll see what the market does this morning, see if I'll get the other half in or not. Okay, that's everything that we've got going on right now. So anybody have any questions about any of those? Good morning to everybody. Orson and Boomjidi, Chris, Yainam. Oh, please forgive me if I mispronounce your names. Deruva, Harry. I got Harry. I can handle that one. Four candle hammer strategy. Let's start talking about that. Okay. All you folks out there who don't like indicators, this is the strategy for you. So I don't have to do my tough love thing about, I don't want to hear anybody complaining about indicators and how indicators are lagging and all that sort of thing. We don't use indicators on this one, so that's good. Oh, these strategies all come from the Trading Strategy Guides blog, Chris, and I will link below the blog entry for this particular strategy. Shailendra, this is primarily for Forex. All right, let's take a look at it here. Okay, step one, you want to look for a new 20-day high on whatever market you're looking at. This happens to be Euro, and we're looking at daily charts. As I mentioned earlier, I haven't done this strategy live myself, so I'm not sure. They're recommending it on daily for daily, like swing trade. I'm not sure if this will work on short term. So in any case, no matter what strategy you choose, you're going to want to test it, back test it, and test it and test it extensively, because even if you know a strategy works, even if it's been proven to you that a strategy works, you need to have confidence in your own ability to handle it, and your own, you have to have your own internal confidence that this strategy works, because not every strategy is 100%. And sometimes you'll go through a string of losses with a strategy. That doesn't mean it's a bad strategy or a strategy that doesn't work. But if you give up on it too early, you might give up on it just before it starts giving you a string of wins. So you have to have confidence in the strategy, and you do that by back testing and forward testing and all those sorts of things. So now, obviously, looking at this example here, it's easy to see where the top of this trending move is right here because, well, hindsight, in real life, however, that's not as obvious, okay? So you won't actually know if you have the 20-day new high until the pullback starts. And we're going to be looking for a pullback next. But you're going to have to look at every candle as it comes and determine if it's started a pullback, if you set up. And so every candle will be new and different. But for instance, this candle right here is a 20-day high candle, okay? So now this is 2018, all right? So I'm not, we're not looking at a live chart here. But this candle right here is a 20-day high. You have to wait and see what the next 5 candles look like to know if this is the beginning or step one of your new setup, all right? But if you look at this and you can't count 20 candles back, that comes to somewhere in here, you'll see that this is the highest of all of them. So this candle may qualify if we get the pullback. But like I say, until you're in until those days play out, you're not going to know for sure. All right. So the first step is flexible and depends on the second step. The second step you want to look for is a 4-day pullback. All right. When you see this 4-day pullback, then you can know exactly where the 20-day high was. All right. So once you see that, you look at your 20-day high, and then you look at your 4-day pullback, and that confirms the 20-day high. Now, the next step in this strategy is that you want to find uh, a 5th day with strong momentum and a close higher than the 4th day. So 20-day high, 4-day pullback, and then a 5th day where it starts to break back up or starts to pull out of the pullback. Okay. You're going to buy on the close of this 5th day. So you won't know until the end of the 5th day if you've got your setup or not. All right. If the 5th day does not close above the 4th day, then you're done. Move on. Move on to um, the next market. Now, I've said that I haven't actually traded this strategy myself. So giving you um, details like, can you look at the 6th day if the 6th day has a higher close than the 5th day? I don't know. That's something that you might have to backtest. I always recommend backtesting these strategies for the reasons I gave you. You have to know. Um, you have to know that the strategy works. And during that backtesting, you may want to look at will it work if the 5th day is not above the 4th day close, um, and the 6th day is above the 5th day, or some such thing. Okay, so keep testing that. Keep back testing your strategies. You should always be testing new strategies. Okay, don't sit back on your laurels. You should always be looking for something better. That's not to say you need to be changing things up all the time. All right. But once you've confirmed that something is better than what you're using, then you might want to add it to your um, toolbox, your arsenal. Okay. I see. I've got some questions. Hang on a second. Roxy, which indicator do you use on this particular strategy? None. On my main primary strategies, I have two primary strategies. One of them is I have a whole algorithm of indicators that I use on Forex daily charts. And I'll get into all that one day. I don't have that algorithm perfected yet, so I'll talk about that one day. The trades that I do analysis for on Monday and Friday, I use the volume indicator and the ATR primarily. And then the rest of what I do is about patterns and candlestick patterns, big patterns, like triangles and trading ranges and such. Let's see, is it necessary to check the past data of 1 month? Roxy, I've heard many schools of thought on that. I do not worry too much about old support and resistance levels most of the time. Sometimes I do. It's kind of hard to quantify exactly when I do. Chris, basically, you don't know if you've got the 20-day high until the pullback has started. But when the pullback has started, you can look and see, well, this is the high candle. Was it the highest of the last 20? So you look back at just count 20 candles back, and or use your measuring tool. Most trading platforms have measuring tools that'll count them for you, but count 20 days back and see if this candle is higher than all the last 20. So that's essentially how it's done. Pretty straightforward. Gumjidi, that where do you start counting? Well, the last 20. If it's going to be a 20-day high, then you need to include this candle as one of the 20. Okay, but for the most part, if it's a 20-day high, it's probably going to be a 21-day high as well. So I think you probably don't have to worry too much about that. Let's see. Chris, yes. The trigger is when the fifth candle, here's the 20-day high, candle 1, 2, 3, and 4. And then this is the fifth candle right here. Let me get my little drawing tool out here. This is the fifth candle right here. And you'll see that the close is up here and the close of the fourth candle is down here. So in other words, in this case, you want to see a bullish candle. Okay. Because theoretically, this open should be the same as this close. On a Forex pair anyway, it should be. So although on the weekends it may not be. So in any case, look at the close of the fourth day candle. Look at the close of the fifth day candle. If the fifth day candle is above, then you buy on that close. Okay. I'll talk about downtrends in just a minute. Keshav, welcome. Again, I apologize if I mispronounce your name. Chris, yeah, that's kind of off the topic right now, but I used ATR 14 on the, or maybe it's 13. It's 14. I'll go back and look at a chart in a minute. Harry, yes, Trading Strategy Guys does a signal service. I don't, I'll talk about it a little bit at the end. But it's not from my signals. But yeah, they do that. What should we do if the market gets over consolidated? Roxy, again, that's kind of off topic, but consolidations are what I personally like to trade when they make nice, pretty patterns. And I'll be glad to talk about that as soon as I get done with this strat. Remind me if I don't remember. Okay, hi Num. I'll be that was my next slide actually. Okay, once you buy, your stop loss goes 10 pips below the 5-day candle. Okay, I like this because it keeps the pip risk low and you can trade larger size. I like using smallest stops possible. That's the reason why I use that 1.5 ATR stop loss strategy on all my other trades, because it allows me to trade larger size. And this is nice. A lot of the strategies in the TSG blog will tell you to put your stop loss below the recent swing low or above the recent swing high. And there's nothing wrong with that. Absolutely nothing wrong with that. And I want to stress that just because I do something doesn't mean it's right. And just because you do something I don't do doesn't mean it's wrong. Okay. We all have different styles. We all have different tolerances for pain. So you need to do, my 29-year-old son says, you do you, boo. So you do what works for you. And that's the reason why there are as many trading strategies as there are successful traders, because we all do things slightly differently. Okay. I'm showing you how I do things so that if you don't have a style of your own yet, you can, draw elements from my style that you like. I've been a musician all my life, and what I discovered early on is that my style of musicianship is a conglomeration of all the people, all the musicians that I've liked in my life. So it's the same way with trading. I do things that I've picked up from traders that I've worked with, traders that I've followed, traders that I've seen. You know, the 1.5 ATR stop loss came from one guy. Um, you know, so it's a really nice thing that you can pull all these elements together and turn them, turn them into your own style. Okay, cool, Chris. Drummers. I won't start on the drummer jokes, but having been a musician all my life, I have a whole toolbox of drummer jokes. In any case, so I like this. The stop loss goes 10 pips below the 5th day candle, and the target or the take profit is 3 times the stop loss. So if your stop loss is, say, 50 pips, your target is going to be 150 pips up here. Okay. Now, if I was using a strategy with a 3-to-1 reward to risk ratio like this, I would be tempted to follow my stops, particularly after a huge candle like this. Huge candle like this, I would probably be setting my stop to break even and following my stops. And then I would allow it to go after this pullback. As soon as it made a new high above this pullback, I'd move my stop up below that pullback and so on and so forth. You know, again, I said earlier, trailing stops is kind of a seat of your pants kind of thing, unless you have a hard and fast rule for it. But it's hard to have a hard and fast rule for trailing stops, unless you use an indicator or something like a PSAR or something for, trail your stops using a PSAR. I have tried that. I seem to get out of it seems to take me out sooner than I want to in a lot of cases. So, Chris, I'm primarily a keyboard player, but like most rock musicians, I dabble at everything. Okay, and here's answer to someone's question. Bam, a downtrend. This works exactly the same way in a downtrend. You want the 20-day low, then you want the pull up, 4-candle pull up. The 5th candle low or close has to be lower than the 4th candle close, and then you enter your trade right there. Stop loss 10 pips above the 5th candle, and target is 3 times your stop loss. Okay. Okay. Anybody have any questions about this strategy? Let's see. Roxy, is it able to predict the change in inverted hammer? I'm not sure I understand your question, but I think if I understand your question properly, are you talking about doing a sell trade instead of a buy? In any case, okay. Somebody asked me. Let me switch back over to live charts. Okay, so Roxy, I guess I've answered your question. Then is that? This is the setup that I use for trading. I do analysis videos on Monday and Friday, and you can find them right here on YouTube. I do this training on Wednesday mornings, and the analysis videos, basically I just update everybody on the currently open trades, and then I talk about the set up a new setup and do an analysis on some instrument. I go through, I have lots of ways of finding what to trade, but mostly I have my hit lists here. This list right here is the list of instruments that I have currently either have open trades or a pattern that I'm expecting that I'm looking to break. I trade primarily breakouts. I also have my green list, and this green list is trades that have recently had news on them that I expect consolidations might form. And I trade breakouts from consolidations, and consolidations typically form after big trends or big trend moves. And big trend moves happen when news happens. So there you go. I look at the news. I find stocks and currencies and cryptocurrencies and everything that are in the news, and then I watch them for possible consolidations after the moves. I like to watch gold and silver and palladium and crude oil, as well as some of these stocks. I look at all the index futures, the YM, which is the Dow, and there's currently a pattern on the which one? Oh, a pattern that just broke on the. No, I'm sorry, it hadn't broken yet. I do get confused because I sleep in between these days of looking at these things, you know. Nice trading range on the S&P 500 right now, waiting for a close above or below this trading range. Bitcoin, we looked at this a little bit earlier. We had this really nice continuation triangle, and that's basically you trend into a continually tightening triangle. I call it winding up. And then during the course of the consolidation, you want to look for reduced volume and reduced volatility. And I look at volume using a 20 period moving average on the volume. And I use the 14 period ATR. So I think that answers someone's question. I want to see reduced volume and volatility on these. Then when it does break out of the pattern, I want to see a breakout with volume. So this has really, really been nice right here. This didn't update this chart. Here's the updated Bitcoin chart. My current stop loss is 11.5 on this to lock in $2,700 on the second half. And that's what I always do. 1.5 ATRs for my stop loss. But if this closes back inside this consolidation, even if it doesn't hit my stop loss, I'm out of this. Because if this pushes up above the consolidation and closes and I enter the trade and then it closes back inside the consolidation, it's gone. I close it, it's done, I move on. I don't have to take the full 2% loss. 2% risk is what I risk on each trade. I don't have to take the full loss. I can keep my loss smaller. If it closes back inside the consolidation, then the momentum of breaking that consolidation is done and gone. So I'm out of it. Okay. Of course, these most often do hit the first target. Once they've hit the first target, I take half the trade off, move my stop loss up to break even, and then it's a free trade. So this took, I got in this on Saturday morning a couple of weeks ago. Sunday, it hit my target. I closed half, moved my stop right here to break even, and then I've just been trailing my stops as this thing has just gone to the moon. So I really expected this thing to stall at 10,000 and retrace some, but man, it totally did not. So that's the reason why I never bet the farm, because things don't always do what you expect them to do. Okay, anybody have any other questions? This Boston Beer Company right here was an ascending triangle, and that's my favorite. I like ascending and descending triangles because uh, they they just work the best for me. Always look for the reduction in volume and volatility. Okay, any other questions, comments, opposing viewpoints? I'm not afraid of opposing viewpoints. It doesn't bother me if people disagree with me. Some people will shut you down. I won't, because everybody has got something of value to provide. Even drummers. Oh, Chris, I'm sorry. I promised I wasn't going to do drummer jokes, right? All right, let's talk about my favorite time, trading maxim time. Today, I have to say, somebody asked me what a maxim was. Um, According to the dictionary, a maxim is a general truth, a fundamental principle, or a rule of conduct, or sometimes just a proverbial saying. Some of my maxims I use to keep me focused during my trading. Others are just motivational quotes that I use in general. I find them very useful to me trading, but also my life focus. They keep me getting my butt out of the chair and going to the gym every day. They keep me from eating all the wrong things that I shouldn't eat. I'm kind of old as dirt, so I need to be doing all the right things to keep myself going as time marches on. So most of these maxims come from reading. Some are suggested by friends or coaches or teachers or other acquaintances. And I add a new maxim to my list whenever I find something that fits me. So I hope they help you as much as they help me. I suggest that you start your own list of maxims. It'll help in your trading. It'll help you in every area of your life. Feel free to borrow any of mine from my list. One day I hope to make an ebook. Um, I've gone through most of the maxims at this point. But so today, number 33, a sequence of anecdotes is not data. For those of you who don't know it, an anecdote is essentially a story. So when I say a sequence of anecdotes is not data, what I mean to say is you can't say, well, the last 4 times I traded this or that strategy, I lost big time, so I'll never use that strategy again. Or the last time I left a trade open during news, it went totally the wrong way, so I'll never do that again. Or the last time I put a straddle trade on before a news event, I made $50,000 on one news trade. So I'm going to do that every time. Now, you know, that those are anecdotes. One time does not tell the story. Okay. 2 times, 4 times doesn't tell the story. What tells the story is back testing a strategy for a period of time, a year or 2 years, 3, 4 years sometimes, and 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 forming a data set that is real information that tells you whether a strategy is working or not working. So, unless you have concrete data about all the wins and losses a strategy would have taken for a period of time, then all you have is just anecdotes. That's absolutely no way to become a successful trader. Test, test, test. I can't stress that enough. Okay? Trading is not get rich quick. Trading is hard work. Trading is hard. I'm telling you guys, it's not simple. It's not easy. It takes a lot of work. It takes a lot of time. It takes a lot of staring at charts. Okay. If you're not willing to do the testing, then maybe trading isn't for you. And that's okay. That is absolutely all right. Just like, rap music may not be for me. And as an old guy, I'm supposed to say that. the truth is there's a little bit of rap music that I think is kind of cool. So there you go. I know music is one of my passions, so I kind of get back to that a lot. One thing I will say is burpees are not for me. That's for sure. All right. Remember the 4 candle hammer strategy steps. First, look for your 20-day high. Then identify a 4-day pullback that goes against the prevailing trend. On the 5th day, the closing price needs to be above the 4th day's closing price. Then buy at the close of the 5th day on the pullback. Put your stop loss 10 pips below that 5th day low. And then take profit equal to 3 times the stop loss. Okay. And reverse that for going short. Okay, somebody asked about signal service. Trading Strategy Guides has the Strike Trader Elite Trade Signal Service. That's a mouthful, isn't it? They also have the EFC strategy now on the signal service, I believe. I hope I'm not lying to you. My office is in Texas, and their office is in near Pittsburgh, Pennsylvania, in a beautiful area of Pennsylvania, by the way. So I don't get into the office very often, but this signal, you'll get Forex trade signals on a dozen or so pairs on different time frames, all based on the Strike Trader Elite system and the EFC system. I'll link below the video for free signals on the Telegraph app, and I'll also post a link that for a video that I did on the Strike Trader Elite system, so you understand how that works. Okay. What is the best EA for Forex under $500? Office work. That's a great question. I think it doesn't matter how much you pay for an EA, that some of the best ones are free or $50 or something. I don't think you have to spend a lot of money for a strategy. A few years ago, I paid like $700 for a strategy that just never worked for me. I don't think that anyone was taking me for a ride. In fact, I still follow the man I bought it from. I don't think that there was anything. I still have a lot of confidence in this man, but the fact is the strategy I bought just did not work. Now, I haven't looked at it in years. It may work now, so I may need to take a look at it. But strategies work in certain markets and don't work in other markets, and it's most likely that I just didn't test that strategy enough. I did not back test it at all. I did not forward test it enough to have confidence in it, so I gave up on it too early. And this was back in 2008, when I was still a snotty-nosed kid, not literally, but as far as trading is concerned. So I didn't really know what I was doing, and now that I think about it, I should probably go back and look at that strategy and see if that's a thing now. But the point is, I paid a lot of money for that strategy, and it didn't work. I've got a lot of strategies. There are a whole lot of strategies in the Trading Strategy Guides blog that are really, really nice strategies that really, really work. And the only reason I don't use them is that you can only use so many strategies, I don't want to sit and stare at charts all the time. If I have too much, if I'm spinning too many plates at one time, I'm going to get confused. So I stick to what I'm good at, and I'm good at daily charts primarily. Once in a while, you'll see me down on a 1 hour or a 4 hour, but I am not good at focusing on 1 minute charts. Like I say, I traded with a guy who traded 1 minute charts for a couple of years, and he is uber successful at it, and I could not do it because I missed things. I was busy reading email or listening, watching cat videos or music videos or something other than watching the chart. And he could stare at the chart for 18 hours and not not lose focus. So that strategy was just not for me. So I trade daily charts, and I look at the charts when I want to, and then about 30 minutes before the close every afternoon, I figure out what I'm going to trade, and I trade it. So, so there you go. So in answer to your question, ignore how much you spend for the EA and try some inexpensive and some free EAs and backtest them and see if you can how well you do. Anybody else have any questions? Domingo, I'll check that out, Chris. Thanks. Any other questions? Hey, let's do this again next week. Come back on Wednesdays at 9 a.m. U.S. Eastern Time, New York time. And I'm doing these webinars every week. Also, watch for the analysis videos on Monday and Friday. I get them out as early as I can, but typically it's afternoon before I get them done. It depends on how long I have to spend looking for something to trade or looking for a setup. So, Benedict, yes, this webinar should be available as soon as it's over. The links and so on that I tell you that are going to be under the video, it may take me a couple hours to get them in there because my gym class is very shortly, and if I don't go as soon as the webinar is over, I will miss it. And if I miss it, I will not be very disciplined. So, so usually when I come back, I will put the links below the video then. So look for them in a couple hours. Okay. Akira, thank you very much. All right. As always, thanks for watching and thanks for subscribing. And if this helped you, click the thumbs up below. You guys have the great remainder of your week, and I will see you next time. Have a great one.